From what we just heard from Michael McKee, and of course we have to hear the answers to the questions later on in the day and tomorrow, from what you just heard from Michael McKee, are the markets going to be disappointed with this approach?
I don't think so. I think what you heard in the opening remarks there still strongly suggests that they're going to be easing policy later this month. You know, he continued to highlight the uncertainties that are weighing on the outlook rather than highlighting the better jobs report or highlighting, the arguably benign G20 outcome. So I think that focus suggests they're pretty strongly on, and also reminding the markets that, and the public that many participants saw a case for easing at the last meeting, and then highlighting those uncertainties. I think it strongly suggests they're going to be, inclined to ease at the meeting later this month. So I don't think this should be read as a disappointment, certainly for those looking for easier policy.
Does this give any indication if we're going to be sort of a front-loaded cutting, like Morgan Stanley sees 50 basis point cut at the July meeting, or if we're going to see a prolonged rate cutting cycle? Does this give any color to that?
Yeah, I think it's really hard to infer from this short statement whether they're thinking about 25 or 50. Certainly there was nothing in the remarks there that suggested an urgency or an economic crisis or anything of that magnitude. Rather, it was saying that, he did say that the economy had performed reasonably well, but that there are uncertainties that are weighing on the outlook. So to me, that sounds more like an approach that will lead to a few cautious, insurance cuts, unless, of course, the economic data really disappoint, which they haven't yet. So to me, this reads a little more like, a cutting cycle, something more like you saw in '98, where they took a few insurance eases out rather than, dramatically slashing rates at the outset.